Hello, trading is closed on October 15th, 2019. Look for the pattern with the early low. This is it. Tomorrow's pattern has the early high. We said this was a pretty negative pattern, that the only thing that would kill it would be to gap up, ideally over these highs and preferably over these. Well, that's what happened. We gapped up without stopping, took out these highs too. That's what it would take to kill the pattern. And that's what we got. We expected a large move. We got that. I thought the odds favored a big drop, but as always, gapping up smartly kills the call before the open. I got some emails from some people apparently aren't familiar with the way I do things. Let's just go over it. I make plenty of calls kill before the open, and when the call's killed, it doesn't cost me any money. I make very few calls which are wrong. Wrong calls cost me money. I don't like to lose money. So I have a plan. If it's killed before the open, then there's no plan for the day. We have a target left over from the 14th. It doesn't expire really until early tomorrow. It looks kind of far away to me. Probably won't print in this preferred time frame unless there's some news event, but who knows? Until the first hour or so tomorrow, that's a valid target. During the day, MEJT gave a sell signal. It gave an ultimate sell signal. As soon as it gave it, the market rallied. Signals are targets. They're not entries, not exits. And eventually the signal paid off. Well, this is the pattern I've been using. We keep trying to find where is the end of this wave purple B. When you have a pattern that's complete, usually it's a beautiful thing and everything fits and you can calculate the end of the waves. There really is no good way to calculate the end of wave B that I know of. And this is a valid count, but it's not the only valid count. If you move this B over to here, you can get a valid count again. Makes a very pretty picture, great fib relationships, and the whole thing falls apart if we go past today's high. Well, here's what happens when you move B over to here. You get an A, B, C. If this is the height of magenta A, there's magenta C, exactly half. This structure is kind of hard to count, but if it's a 5-wave structure, you connect the tops of 1 and 3 parallel to the bottoms of 2 and 4, just as in this 5-wave structure here for A, B, C. It's a beautiful pattern. If it works, we won't know till tomorrow if it works. If it works, you can calculate targets. If blue C is a fib target of blue A, you just draw your Fibonacci grid, put this on top, and whatever numbers you get are your targets. And if we get A equal to C, it's about 2773. Doesn't mean it'll work, but if we start dropping, it does fit and it doesn't break any rules. So Wednesday's pattern has the early high. We could gap down first. Normally it's a rally day with a high in the final hour. Don't forget, all we have to do to invalidate this pattern where you gap up, hit new highs, can't hold on to any of it. It's a negative pattern. 3 days in a row we've had negative patterns. But all you have to do to invalidate it is to take out these highs early, ideally by gapping over them. And if the market's going to go higher here, that really shouldn't be too hard to do. If, on the other hand, we drop in a straight line, there's a wave count which says we're in wave blue C down. The one thing that's always been an issue for me is the breadth. The market's near its all-time high. Number of stocks with favorable pattern keeps getting less and less and less on each challenge. I'd be happier if we washed out, have one more leg down with a new relative low with this low holding. Just because I'd be happier doesn't mean it'll happen. But we have a candidate for the end of wave blue B. We have a pattern that's usually positive and rallies into the close, but it's negative, and lower prices will print, not necessarily a lower close. Lower prices are going to print if we can't take this out early, and if we start dropping, then I'm going to put us in blue C. That's today's call.